Hey everyone, Tom here. Today we'll be talking about the latest stock market news, as well as our technical analysis thoughts on the S&P 500, Nasdaq, dollar index, and gold. Lots to talk about today, and we're at critical levels. Stay tuned. So yesterday, the S&P 500 hit that 3230 resistance and the bears started to take control of the market again. The session was up, then the session began to slowly shift down, and over today's futures, we've seen a bit of a sea of red, led actually by the Chinese market with a 4.5% fall over the day. But it does make sense, of course, because of their steep rise with more profit taking happening. July is usually a bit of a positive month for stock markets, and when we actually look at stock markets as a whole, we can see here with the Yardeni research is that July generally, and this is taken from 1920 to 2020, is usually a positive month more than it is a negative month. But when we start to look at the next months being August and September, we see weakness in those months. And now a lot of people have been talking about this, but it does make sense that we've seen a bit of heat coming off this crisis. Obviously, the Fed has started pulling back its balance sheet a little bit, which we've been talking about, and that has been really the main driver of the markets. And of course, the retail herd with that 25% participation, which is almost crazy to think about when we see figures from the past. In terms of yesterday, we had another day of rotation. The big five, Microsoft, Apple, Google, Facebook, and Amazon, performed poorly as traders took profits and they moved them into unloved sectors. Look at the unloved sectors. Look how much they're up in comparison to Apple, Microsoft, Google, and Facebook. And when you thought you'd look at this and you said, wow, look at all this green, you'd think the market was up. But it shows you how much power these big five have for the S&P 500. When we look at the week, it's the same kind of story. A rotation out of most of the big five except for Apple, and a rotation into the other sectors. And this happens time and time again. If it's something that interests you, make sure to subscribe and hit that bell, as we'll be covering that and more thoughts on the stock market over the future. I just wanted to take a couple of seconds to also thank everybody for commenting. It helps me, as I always say, to make videos every day with some of the great comments down below. That's excellent. So why did the market go up this week anyway? Well, earnings have been okay, with JP Morgan and Pepsi obviously doing all right. Wells Fargo didn't do that well. We'll talk about the earnings and why they're so important today. A lot of big names doing earnings, but also this vaccine that came out. And we see here that Moderna supposedly now is going to go into those phase 3 studies. But what I wanted to say was, it doesn't mean that it's going to be available straight away. Even the most optimistic says that by the end of this year, we might see some kind of emergency use only vaccine. Even here, you see third quarter of 2021. Is the stock market getting a little bit carried away with this kind of vaccine stuff? I kind of think so. I think a lot of people in the comments think so as well. I'd love it to be a thing, but I'm not sure if it is a thing yet. There are many hurdles for these to overcome before they get approved. Speaking of hurdles, Goldman Sachs, our great friends, are at it again. Well, they have a 90% chance that the S&P 500 over the next decade will return an average of 6%. It's pretty amazing that they think that, and they're making a pretty big call, but Goldman are known to make calls and then flip on them a few months later. They last made a call in July 2012 and forecast a return of 8% instead of 13.6% over that time. So let's see if Goldman are correct. Time will tell. Market watch in terms of things that we want to be looking at in earnings calendar. There are a lot today. We've got Domino's, Charles Schwab. We have Johnson & Johnson, Bank of America, Morgan Stanley, and the list goes on. There is a lot of returns today in terms of, let's see what Netflix does as well. Netflix will be a very interesting one. A lot of economic news coming out. We will do a weekend study on some of this to get an idea of how many are beating, how many are missing, and how many are neutral, as that's important to overall sentiment of the market. And generally that trend continues. Remember, when you see maybe 5 from each industry or 10 from each industry report, all of a sudden you're starting to create a bit of an idea, and the price action will show us in the charts. But at the same time, it's good to know whether certain sectors are doing well or not and why they're doing well. For the calendar event, this is recorded before the Philly Fed Manufacturing Index and unemployment claims. Unemployment claims are expected to come in under last week in terms of their dropping, but still incredibly high numbers with 1,250,000 lost jobs. It's starting to get a little bit ridiculous. These jobs continue to still be very high in my opinion. And of course, no one seems to care because everyone believes the Fed has the market saved. And it's pretty terrifying to think how many poor people have actually lost their jobs throughout this crisis. So let's get into what everyone's here for, the charts. Let's talk about this dollar index. So a few weeks ago, or actually not even a few weeks ago, on around this date here, the 6th of July, we talked about this trend line. I've left it here for everyone to see. We talked about how when it broke through, that was going to be negative sentiment. It came down, touched the first level of support, which is the 96.40, bounced off it, and then it's come down to the real level down here, the previous low. And this is trading at 95.76. Now, it bounced off that. No coincidence that it comes down to this level, the level of support, as we are hitting resistance on the S&P 500. Remember, I talk about this all the time. There's a lot of cross analysis that goes on, and dollar index and S&P 500 are often quite correlated. Also, the Aussie dollar is correlated to the S&P 500 as well, with Aussie dollar hitting a resistance point at the same time that we saw the S&P 500 hitting that 32.30. So it's bounced off here. We're about to get a potential engulfing candle. Be nice to see this close. As I mentioned, dollar index is a key thing, but I want to just quickly bring up something for technical analysis traders out there. It doesn't mean that every level or every area is going to be highly statistically good for you to trade. If the market got through this 97.61 and then it came back and it did something like this is actually a high statistical area because of the nature of the resistance that was caused before and the nature of the fact that this would become a very nice kind of double bottom pattern when it broke through on the larger time frames. That's the kind of level that I like to target. Not every day will you be finding amazing opportunities. It's awesome if you think you can get them, but that doesn't mean that just because you might say, oh, look, this is going to happen, there are higher statistical chances when you put more technical analysis information together, as well as sentiment, as well as all these other things. You bring together 3 to 6 things and it will strengthen your analysis overall. Remember, have as many reasons as possible to place a trade or to place an investment. It's really just like if you were doing stock analysis fundamentals, you would want to know everything you could about that company. You would love to know inside information as well, but you'd want to know as much as possible. Let's talk about this US 500, S&P 500. We hit the resistance. These are the futures. As everybody would know that's been following this channel for a while, I prefer to look at the real market SPX, but these are the futures. We hit that 32.30. We're rejecting off that. This is the daily. We've still got that incredibly strong kind of 3,000 down here on the real market as well. And we're still trapped in the channel. So this is an opportunity if you want to take, I guess you would say, high reward, medium risk kind of trades. You could do those off this resistance. And you could also see how the market interacts with this zone. One thing that a lot of people like to do is they like to maybe see it bounce up here, come back down, and then break through this level. Now, if it broke through this 20, when the 20 would be up here at that point, what's that doing? It's a double top on the smaller time frame that you can then short down to the support here at the 31.50 area. That's a trade within the overall pattern of the channel. So when you recognize larger time frame patterns, what that then gives you the opportunity to do is to jump into the smaller time frames and start to look at the 15-minute, look at the 1 hour, look at the 30-minute charts and trade within those. So we've seen a rejection of this 32.30. I still think it's a little bit too early to say, oh yes, it's going to sell off or anything like that. We are in July. We saw July as generally a positive month through the earnings. Obviously, if we see misses, that's going to be a big thing. But a lot of them so far have been coming in kind of neutral to up. If that continues, we might be just hovering around here or even break through the top. So for now, we're effectively stuck in this zone. We have to see more price action with either the 31.50 getting taken out for further shorting, or we're going to possibly just come back down, test this 31.80 and maybe bounce off that as well. So I like to see more formation or more structure in the markets before I consider putting my hard-earned money down. if you were looking at shorting up here, and a lot of people like shorting channels, all you'd really need to do is you'd need to figure out where you're going to place your stop loss. Now, yesterday I mentioned this was the resistance, and when this is hit, notice how the market likes to tip just through it. Notice these wicks. So here we're through around 32.37 over the 32.32, and here we're over 32.43 over the 32.32. This is the classic stop hunt that happens in the market. What do most retail traders do? They get greedy as, and I totally get why, and you place your stop losses just above. The better thing to do is to get a bit of an idea based on the size of the channel. So let's say this channel here is 200 points. If we have a 200 point channel, maybe you want to put a stop loss, a percentage above the channel. And we talk about percentages all the time because you want to have statistically higher chances to be able to be market adaptive. So percentage above the channel of the channel range. Start to bring that in. It's something we talk about in our course all the time. It's something we talk about our webinars all the time. It's one of those things that I really want everyone to understand. If you're market adaptive and you have nice market adaptive stops, you do not get hit by this. So then what you can do is you can basically say, okay, I'm going to sell this. I'm not going to look for any other confirmation other than potentially just the top of the channel. That's a riskier kind of play, but it's something you can do. You place your stop, and then of course you sell it to a level. Now, where will you take the profit? Well, the first problem is really this 3180. The next problem is the 3150. And then underneath that, of course, all the way back down to really the bottom of the channel. So you can start to babysit it, start to watch it, see what happens. It's just something that I think is worthwhile considering when you're taking these trades. What are you trying to get out of this trade when you place it? Do you know where the next level of support or resistance is? A very important thing to be thinking about on the S&P. So let's talk about this Nasdaq. Well, the Nasdaq is kind of finding weakness. Now, we saw that big bullish kind of pickup and the bullish hammer here on the futures index. Remember, we still prefer to see the non-futures index for our confirmations. What I'm liking here, though, is it's coming back down to test this 20. Remember, the 20 has held this market the whole time. But think about what this is actually telling us about price right now. Well, one thing is we go into this 2-hour chart. We have our peak, we have our trough, we have our lower peak that's being formed at the moment. What if it gets under this 200 on the 2-hour? We're going to get a lower trough. We're going to have a change of trend on this time frame. Is that strong enough for further really strong shorting? No, it's not. We've had change of trends before. Look at this, the 2-hour change of trends happened before. I would prefer to see it at least on the daily in terms of being very strong, and I'd like to see it get really underneath this zone. I think there's still going to be some selling down to here, and this will be a strong buying zone now. Previous resistance, previous support will be buying. There'll be a 50 moving average there on the daily. That's kind of where it could get to. So if it gets under the 20, it's going to hover or gravitate down to the 50. There'll be buying pressure in this area here. This 10,000 will now have buying pressure in it. And then, of course, the next level, the best level of all, is around this 8,800, 9,000. I like that a lot if it comes down, just because there'll be a 200 moving average on the daily, previous resistances, and it makes a lot of sense for it to get there. That's a pretty deep pullback. We'll jump on and actually put a fib and have a look whether that will be a big fib level. Let's have a look here together, and it'll be a 50% fib level. So there's a lot of strength around this line. It was even looking pretty strong fib if you drew to the top in terms of being a slightly 38.2 kind of pullback. So yeah, there's a fib there. Fibs can be drawn and curve fitted. It's another reason I don't always use these kind of indicators, but do think about that and think about the key levels. This is the super dip. This is, of course, the other kind of dip that could happen, that previous peak acting as support. And then will the 20 hold? Well, it's held so far, but it's starting to look definitely quite shaky. On to gold. I've left the charts up that we've drawn over the last couple of weeks. So we had that incredibly great channel break. If we take the distance of the channel break and we kind of extrapolate that out, we'll notice that the market went on and did it to the T. That's the good thing about drawing to the bodies. Remember what I talk about on this channel all the time, draw to those bodies. The bodies are the key. The nice closes are, the wick is the noise, and the closes are where the market fight ended. So here we had that nice bounce off, big bullish hammer coming off the bounce. Where are we now? We're in a nice bit of consolidation at that 1800 and kind of at that 1800 level. We dial it down a little bit into like a 2-hour chart and start to have a look at the market. What you'll notice is that we pretty much are trapped within a zone between around this 1790 in terms of bodies and wicks being there. And then we've also got this peak of around that 1814. So when you draw this up on a smaller time frame and zoom it in, that's pretty much your levels. You've got a level here for gold traders. I quite like this chart, it's not too bad. And then we've got that really strong kind of level with bodies up here as well. So nice levels for gold. Gold could continue moving upwards. We're in a channel right now, and I'm sure some people have been trading it. Notice one thing over here just quickly, nice bullish hammer. It fakes out, no close confirmation, very important. No close underneath this level on the significant time frames. It bulls up, and then of course goes all the way to the end of the channel. So there's so many trading opportunities other than the S&P 500 out there. And if you just look at the S&P 500 and you look at nothing else, I always say, go and check out those other ones. It will help you out a lot. If you've enjoyed this video today, please remember to subscribe to the channel and hit that bell, and we'll see you in the next video. We're talking about the markets again. Happy trading, everybody. Stay safe. Bye.